Okay, folks, let's begin with the building permits that were released last week. And it just goes to show you that you can't take that headline number that comes across CNBC and run with it. It was a bad number. Even though building permits came in higher than expected, when you drill down into the report, you'll see that the building permits were for multifamily homes, not single-family homes. So please keep that in mind. When you take into consideration the building permits for single-family homes, they actually decline. Then, when you take a look at the building starts, you had a market expectation of 705,000 new units. Actual was 698,000 new units. Jobless claims. Initial jobless claims. The prior report was revised up from 351,000 to 353,000. So what you're being told on CNBC is about a market recovery, an economic recovery, is just simply not true. Now, I'll show you what you should be looking at. What they want you to look at are the futures. The futures market, they hope, if they get them nice, bright green, it'll get you excited, get you chasing stocks into the open, because most fund managers underperform the S&P 500, and most fund managers can only be long of stocks. They're never going to come on TV and say short a stock or go to cash because it only hurts them. They're never going to want to see you do that. I am long short. I don't care which way the market goes as long as I'm positioned in the proper way. Buy and hold is dead. You need to be able to trade to the short side as well as to the long side to make money and outperform the markets. Now let's get to how we did last week as opposed to the markets. It all comes down to results. Last week, the market was down. We made our week last week on Monday morning by 10 o'clock. We were out of positions. The first one was HUSA, HUSA, Houston American Energy. I profiled it a couple of weeks ago, 2 weeks in a row, as a matter of fact. Here you go. We started buying it here, doubled our position here at 593. I know this is 2 weeks ago, but we traded this stock twice. The stock rallied and we took profits on the trade, went to cash, the stock pulled back. Again, we jumped in on the stock. Basically what happened is this, is that the CEO of HUSA came out, not this Friday, but the prior Friday, and said, you could take any talk of us going bankrupt off of the table. Now, the reason why we like stocks with large short interest is for that very reason. Every once in a while, you have a CEO who likes to do payback on the shorts and likes to squeeze them, and this is a pure short squeeze. We made the stock rallied over 30% that Friday. We didn't make quite 30%. We were about 28, 27%, but we got out on Monday with a heck of a profit. We gave back some. We came out with a heck of a profit. The other stock that we're looking at, as a matter of fact, I still like HUSA as it comes back down, retests is low. We may just get long of this again. So we'll keep that on our watch list in the coming week. Members, I'll be covering this on the week ahead commentary. For you folks who are not currently members, you want to see the week ahead commentary, which I'll be sending out on Sunday with a complete analysis on all the stocks I'm going to touch upon today. Please sign up for the 14-day free trial offer. The next stock we took profits on last Monday was Human Genome Sciences, another stock with a large short interest. We took profits early in the week. By Monday, 10 a.m., we had made our profits for the week. We needed to do nothing to outperform the market. The market closed lower on the week. We closed higher. A great week. This chart here is a monthly chart of the U.S. Treasury note, the bond. And it's critical to pay attention to because I'll refer back to what Wall Street wants you to look at. They want you to look at the futures market, get you excited, get you in. I preach to members to please don't pay attention to the futures market. It's only an indication of how the market might open, not where it's going to close. It's always where this market closes that makes the difference, not where it opens. So what you're looking at here is a 10-year bond, and I pointed out to members a few weeks ago, look out, we are at the top of a trading range. This trading range is tight. Get ready for a correction. More than likely, it's going to fuel the stock market higher. But don't bet that Bernanke is going to allow these rates to crack. Now let's fast forward to take a look at if you're seeing the bond market correct, you can bet your bottom dollar that yields are rising. And this is a monthly chart of the 10-year Treasury yield. Here's where we were only a couple of months ago. Down below 2. We are now at just over 2.25. Where did we close? We closed at 2.25%. So what does that mean? You have building permits on residential homes that are dropping. You have sales that declined last week, yet mortgage rates are going higher off of historic lows. The Federal Reserve in a presidential election year is not going to allow this to happen. They're going to keep the bond market aloft, what I call stealth QE3. That means that the Federal Reserve will be in the bond market, propping up bond prices with borrowed money, and man, talk about a house of cards. But that's what they're going to do. It's a presidential election year. Bernanke is not loved by the Republicans, and he loves his job, and they will replace him. So you can bet they're going to try to keep that bond market aloft. They're going to try to keep money in bonds, and that will prevent an inflow of money into the stock market. Let's touch on the stocks that we're going to be touching upon in the coming week. And I'm going to touch upon these with members, these bond prices with members over and over again because it's a key part of our trading philosophy. Not the futures. Currencies, you need to watch out for your currencies. The strength of the US dollar, the euro. You need to watch out for these currencies to see which way the market will head, because of late, the US dollar, when it's weak, is bullish for the market. So forget about the futures market. Pay attention to the bond market and to the currencies market. That's what we do here. Sign up for the 14-day free trial offer. Learn how to trade the way Wall Street doesn't want you to know. Let's move on. FURX. I covered this one last week. We had some nice topping tails the prior week. It didn't meet our short criteria. This is an extreme oversold stock. It still remains slightly extreme oversold, but my guess is here with this bottoming action, the stock is a short-term buy, especially if it breaks out above this 25-20 level. It's going to be a buy all the way. Expect to see a key reversal, then you're going to want to look to get short of the stock. But right now, FURX is a buy with a potential short in the coming days to weeks. CKEC, Carmike Cinema, is another one I profiled last week as an extreme overbought trade. We're still watching it. Now it's got an RSI of 90. Back then it had an RSI of about 80. So this is the discipline. When you read a book like Technical Analysis for Dummies, they tell you to short a stock or sell a stock when the RSI gets above 70. Well, if you lived by that rule, here's what above 70 here. Right here, you did have a pullback, but the RSI stayed strong. And look at the rally you would have missed out on. Now, if you would have shorted last week without taking into consideration price and volume actions, your indicators, you would have lost your shirt. We sat on the sidelines because the stars were not in alignment. We're very close to getting short of Carmike Cinemas. I'll send out an alert to members when we're ready. And members, I will be going into all of these in great detail in the weekend commentary, set to be released tomorrow. Again, that's for members. So please, sign up for the 14-day free trial offer. You can always cancel. Francesca Holdings, another one. This one had great fundamentals. It looks like they're going to want to continue this rally higher. So the stock is a buy, even with an RSI of 88 on a breakout above 32.94. Indicators are looking good. The stock's probably going to head higher. It may reverse, so you need to use a trailing stop loss order. So if you're going to buy the stock, please use that trailing stop loss order. Protect your downside. You need your capital reserves to play in this game. In Summit Hotel Properties, I didn't trade this one. One of my members did trade it, so congrats to Dave. Rally higher, good trade for him. Pullback. Now this is getting ready to become a trade once again, because what you want to see is a test of this previous support. Will it hold? If it does, you have a logical stop loss point, and you can look to ride the stock again higher As long as you're using a trailing stop loss order, step away from your computer, let the computer do the work for you. STRI, we're looking to get long of this stock. We watched it all last week. This is what happens when you get long of a stock too quickly. It looks as if it's going to rally. You buy it too early in the day, and I'm referring to, it looks like last Monday. And you see that topping tail there. It followed through on Tuesday, but still, this is a haunting sign for me to see that topping tail. And I said, you know what? Let's wait. I bet you it rolls over. And sure enough, it did. RSI is now back down below 20, which is good. I'd like to see the stock get a bit cheaper, and then we will be all over to the long side. Anthera Pharmaceuticals. This is a cheapie stock, trading at $2.34 per share. I like this stock. The 50-day moving average is in the rearview mirror of crossing below the 200-day moving average, so that's behind us. So we'll be looking to build a position in ANTH. Members, I had commentary out on this one on Friday. Look for more elaborated commentary in the week ahead commentary. I'm going to be going into intraday trading setup as we proceed into Monday. Okay, this one, Spectrum Brands, just popped up on our screen over the weekend. Symbol is SPB, NYSE traded stock. A monster run to the long side here, so congrats to those who are long of this stock. But it's time to look to get short. So we'll be going over this with members, going out to historical resistance on this stock, going into detail on the indicators so we can begin to open up a short position. Next stock is Cardiome Pharma, CRME. This is a penny stock. I like the setup here. We're going to probably be involved with this one early next week. I see there's a little bit of work to be done on these indicators. Probably a little bit of backing and filling, which is fine, but you can expect that we'll probably be getting long of CRME in the coming days. Be careful. These penny stocks are very light volume, so just don't go putting in your market orders in there, or else you get robbed blind. Use your limit orders. MDRX. I like this stock. This is not an extreme oversold stock. However, I like the price setup here. You're coming into historical support. I like the candlestick setup. I like the Stokes setup. Again, I'll be going into this with members over the weekend in the weekend commentary, so we know what our strategy is for the coming week. Pampa Energica. This is a South American play. NYSE stock. RSI, whoa, at 11. The stock is looking good. I like this stock very, very much. And I'll be going into it with members as to why. Great bottoming tails here. I'll just give you a clue to visitors to the site. One of the indicators that I look for, but by no means the only indicator that I use to decide when to buy a stock, is I look for bottoming tails on the candlesticks. That's a sign of the support down here. Doesn't mean that there's a bottom. It means that you're close. So please, if you're thinking about trading this stock, you're not quite sure, sign up for the 14-day free trial offer. Check out my analysis. Kit Digital, symbol KITD. This one took a beating on Friday. Amazing sell-off of 22.33%. Massive capitulation volume. Even though I say capitulation volume, it doesn't mean that this stock is a long by any stretch of the imagination. It's a watch. Case in point, you have your stochastics, which are rolling over. That tells me there's probably going to be some considerable downside. What we need to do with this stock is check out the intraday charts as well as the monthly charts or weekly charts to see where historical support is. Then we plan our strategy along those lines. And that's it, folks. Please, if you have a question with regard to the stocks I'm covering today, please shoot me an email. I will be touching upon all of these stocks in the week ahead commentary set to be released on Sunday. So please, I beg of you, don't get suckered by these fancy pants, well-dressed thugs that come on to CNBC. All they want you to do is to buy stock. They're not compensated on their performance. They're compensated on how much money they get into their funds. So learn how to short the stock market, because although, here, let's take a look at the spiders. Although you had a decent reversal on Friday, and the Stokes do look as if they're going to hook up and head higher and possibly break out, I think that the end is closer. I think that we're in the 8th, 9th inning of this rally, and you need to learn how to begin building a short position. And we've already begun to do that. So it's fine to be net long of the market, but when you're in this mature type market, you need to be able to build your short positions so that you're positioned for when you do get that crack in the market and you begin to add to your short positions. So that's what I'm going to be going over in detail. That's what I try to teach my members on how to do that, how to build that position. Even though the market looks great, it always comes to an end, folks, always when it looks the best. So sign up for the 14-day free trial offer. Everybody enjoy the remainder of your weekend. Talk to you soon. Bye-bye.